Finding value, managing risk. This is the core of what we do at Foord Asset Management in striving to deliver returns for our investors meaningfully ahead of inflation over the long term. I'm Brian Arcese, one of the multi-counselor portfolio managers on the Foord Global Equity Fund and Foord International Fund at Foord Asset Management in Singapore. Finding value and managing risk form the two building blocks of our investment philosophy, together acting as the shining lights guiding what we do. Fundamentally, we believe strongly that a company's earnings determine its value, and that over the long term, stock prices follow those earnings. As such, we spend a great amount of time forecasting a firm's earnings 3, 4, 5 years into the future and over the longer term. The importance of earnings in determining long-term returns cannot be overstated. Changes in corporate earnings have routinely accounted for over 90% of the S&P 500's price return over the past 50 years, the balance of total return being largely attributed to dividends. In our forecasting of a company's earnings, we spend considerable time evaluating a firm's management team. A sound management team is often evidenced by an incentive structure strongly aligned with shareholders and with a record of generating high returns through an investment cycle, successfully demonstrating the team's ability to reinvest and allocate capital better than peers. We're focused on identifying companies that are likely to structurally grow their earnings sustainably, often the result of a defendable competitive advantage and durable business model sound management teams have ingrained within their firms. The second hallmark of our investment philosophy, of equal if not more importance, is managing risk. The understanding and management of risk is core to the Foord investment philosophy. Importantly, risk isn't what's occurred in the past, nor is it volatility. We spend our time forecasting not only the probability of each individual risk occurring, but also the potential impact of any number of outcomes. We worry about and forecast a far higher number of risks than those that come to fruition. Though far too many to cover in total, there are two perpetual risks that we guard against fiercely: inflation and the permanent loss of capital. Over our history, many investing benchmarks have come in and out of favor. None of them, however, consider the risk to investors of not keeping pace with inflation. Since Foord was founded 40 years ago, the purchasing power of a dollar has already been eroded by 2/3 and is now worth the equivalent of 33 cents. Our ultimate benchmark has always been to construct portfolios to deliver meaningful real returns, well ahead of inflation. Finally, we do not view volatility as risk. Rather, we define risk as the permanent loss of capital. We eliminate all securities from consideration with any probability of a permanent loss of capital, no matter how small. Since our inception, we've employed this investment philosophy in our endeavor to look after a few investors really well. We're proud to say we have done that, and we truly look forward to continuing to look after these and our new generation of investors over the decades to come.